Hey guys, what is going on? Welcome back to my Robinhood portfolio. Today I thought we would talk about volatility. This comes in response to a viewer on the channel, JC Vin, who was asking about beta, essentially what it is, what is it used for, and do I use it? Apparently he was looking at Morningstar.com, a good site to take a look at stocks. This was in part of the evaluation of a stock, and he was wondering what it means. So I thought I would go through both volatility as well as beta and how it is used. So very, very generally, volatility is simply referring to the amount of uncertainty or risk about the size of changes in a security's value, the stock price. How high, how low will a particular stock go up and down over a set interval of time? Basically, the larger the spread, the higher the volatility within a particular stock's price. So means that the price of a security can change dramatically over a short period of time in either direction. The stock is very, very volatile. A lower volatility stock, essentially over that same period of time, the price would not fluctuate that dramatically. So you'd have a less up and down price in the stock in a particular interval. It doesn't really mean it's either trending up or down. It simply is referring to if you have a particular price, how high or how low will that particular price fluctuate around that particular baseline. That is what volatility is all about. And with regards to a particular stock, there's a metric that is used to kind of approximate the amount of volatility with a stock's price. And typically they use a benchmark, which is the S&P 500. And the stocks we'll be talking about today all use the S&P 500 as a benchmark. Again, beta is not shown in Robinhood. I wish it was part of the statistics here in Morningstar, in my E-Trade account, my Vanguard account as well. Most stocks have some of these other metrics, other numbers associated with the stock that are used, again, to analyze how good the stock will be for any particular investor. As you can imagine, the higher volatility, the higher risk with a particular stock. Again, risk equals reward in the stock market. But some investors do not want a lot of risk, do not want a lot of volatility in their portfolio, so they select stocks that have lower volatility. So how can you measure or how can you analyze the stock with regards to variability in the price, volatility that is? There is a metric called beta. So beta approximates the overall volatility of a security's return against that of an underlying or relevant benchmark. Again, the S&P 500 is typically used, and for all three of the stocks we'll be talking about, the benchmark is the S&P 500. The beta value is 1.0 if it is the same as the benchmark. So the S&P 500 overall would be 1.0 for beta. I have a great S&P 500 index fund here, Vanguard VOO. This stock has a beta of 1.0 because essentially it is the S&P 500. It has all of the large cap stocks that are composed in the S&P 500. You can see that on the bottom here. So the volatility of this stock is exactly at the benchmark. So it is 1.0. So a beta of 1.0 equals that of the S&P 500. Another particular stock that I actually have in my portfolio is SPHD. I just put a video out about this particular stock. This is a great stock. If we can find it here, let's just go to my portfolio as it is in my portfolio here. I only have one share on Robinhood, but I do have a large holding of this in my E-Trade account. You can see here, this is an S&P 500 fund as well, but it is a low volatility ETF. So the beta on this one is actually 0.70. It is less than the S&P 500 volatility. So the up and down price in this particular stock is much less than the underlying index, the S&P 500 index. So essentially what this is meaning is that historically, for example, if the S&P 500 would move 100%, this stock would move 70%. It's 0.70. So it's moved 0.70 or 70% for every 100% or 100 move in the underlying index, the S&P 500. So it is much less volatile. That number, that beta number of 0.70 can be used as a gauge of saying that this is a very, very stable stock, a low volatility stock. On the other hand, another one of my stocks that I do a lot of trading in, one of my largest holdings, actually my largest holding in the portfolio is Ford here. And you can see here the price of Ford jumps up and down quite considerably. And you want this in a stock that you day and swing trade. If there's no variability, if it's very low volatility, the stock will never jump up and down for your limit buy and limit sell price. So you want a stock that has a little bit more variability than the underlying index. And the beta for this one is 1.2, right around 1.2. I think it was 1.19. But essentially what this is saying is that it is moving 110, 120% for every 100% move in the underlying benchmark, the S&P 500 again. So it is much more volatile than the S&P 500. The up and down prices will fluctuate a lot more than the S&P 500. And you want this in a stock that you are day and swing trading, because you want the stock to go up, hit your limit sell, come back down, hit your limit buy. Up and down is exactly what you want. The more up and down, the easier it is to put in your limit buy and limit sell orders, and the easier it is to make money. And this is another key component of any stock that you're going to be doing any day trading with. You want the volatility to be rather large. You want large swings up, large swings down in the price of the stocks, where you can buy and where you can sell off. So that is what beta is about. So that's a really quick description of volatility, as well as what the metric beta is all about. So beta is a measure of how quickly and how large a stock's movement in price will go up and then also go down. The larger that movement, the larger the beta. And again, it's taking an underlying index. Typically, it's the S&P 500. All the stocks I talked about, Ford, SPHD, and VOO, all use the S&P 500 as the underlying index. So beta, the larger the number, the higher the volatility. The lower the number, the lower the volatility. And it has pretty large implications for stocks that you're going to be holding for a buy and hold strategy, as well as stocks that you're going to be doing day and swing trades with. So that is what volatility is about. That is what beta is about. If there's any questions about that, let me know in the comment threads down below. And again, like all of my videos, if there's enough input, if there's more clarification that needs to be needed, I'll do an update video. And if there's anything that I said inadvertently, incorrectly, or there's more to add to the discussion, please do so in the comment threads down below. Always appreciate your guys' input into the videos. Constructive criticism and feedback is always appreciated. So kind of with that, I'll end the video. As always, if you guys enjoy my videos, feel free to like, share, and subscribe.